Donald Trump, the businessman, the politician, the disruptor. Whether you love him or hate him, one thing is certain. His policies, decisions, and influence shake the global economy. But could his return to power, or even just his presence in the political arena, trigger a worldwide financial crisis? Donald Trump and the risk of a global economic crash. From trade wars to inflation, stock market volatility to international tensions, we break down how Trump's leadership could send shockwaves through the global financial system. Is the world on the brink of another economic meltdown? Let's dive in. And subscribe now for in-depth analysis on politics, economics, and world affairs. Donald Trump and the risk of a global economic crash. Introduction. The global economy is a complex and interconnected system that is influenced by multiple factors, including leadership, policy decisions, trade dynamics, and geopolitical stability. Former U.S. President Donald Trump remains a polarizing figure whose policies and leadership style have had significant economic consequences. If Trump were to return to office or wield considerable political influence, many experts argue that his economic policies could create serious risks for the global financial system. This article examines the potential pathways through which Trump's policies could trigger a global economic crisis. Trade wars and protectionism. One of Trump's most defining economic policies was his aggressive stance on trade, particularly his trade war with China. During his presidency, he imposed tariffs on hundreds of billions of dollars worth of Chinese goods, leading to retaliatory measures from China. These trade conflicts disrupted global supply chains, increased costs for businesses and consumers, and created economic uncertainty. A renewed Trump presidency could see a re-escalation of trade wars, not only with China, but with other economic allies such as the European Union and Mexico. If tariffs were significantly increased, global trade could suffer, leading to economic slowdowns in major economies. Countries dependent on exports, such as Germany and Japan, could experience recessions, further destabilizing the global economy. Financial market instability. Financial markets thrive on stability and predictability, both of which are often undermined by Trump's unpredictable and confrontational leadership style. His past administration saw multiple instances of market volatility caused by sudden policy shifts, Twitter outbursts, and political conflicts. If Trump returns to power, investors may once again face heightened uncertainty, leading to capital flight, stock market sell-offs, and reduced investor confidence. Moreover, Trump has expressed skepticism toward the Federal Reserve, often criticizing its interest rate decisions. If he pressures the Fed to keep interest rates artificially low or implement policies that prioritize short-term gains over long-term stability, it could create asset bubbles that eventually burst, triggering a financial crisis similar to the 2008 meltdown. Deficit spending and national debt. Trump's economic policies have historically emphasized tax cuts and increased government spending, particularly on military expenditures. His 2017 tax cuts significantly increased the U.S. national debt, which has only ballooned further under subsequent administrations. If Trump were to return and implement another round of tax cuts without corresponding revenue generation, it could exacerbate the fiscal deficit, leading to higher borrowing costs for the U.S. government. A worsening U.S. debt crisis would have global ramifications, as the U.S. dollar serves as the world's primary reserve currency. If investors lose confidence in the U.S. government's ability to manage its debt, bond yields could spike, leading to financial turmoil, not just in the U.S., but in emerging markets reliant on dollar-denominated debt. Geopolitical risks and global uncertainty. Trump's approach to foreign policy has been highly erratic, often straining alliances and creating geopolitical tensions. His withdrawal from multilateral agreements, confrontational stance toward NATO, and unpredictable diplomatic decisions contribute to global instability. If tensions with China, Russia, or Iran escalate under his leadership, the risk of economic disruptions due to sanctions, military conflicts, or trade embargoes increases. A potential conflict in the South China Sea, for example, could disrupt global shipping routes, leading to supply chain crises and price shocks in energy and consumer goods. Similarly, strained relations with the European Union could weaken transatlantic economic ties, negatively impacting trade and investment. Climate policy and economic consequences. Trump's disregard for climate policies could also have significant economic repercussions. His withdrawal from the Paris Agreement during his first term signaled a rollback on environmental regulations, favoring fossil fuel industries over clean energy initiatives. If Trump were to reinstate similar policies, the global transition toward sustainable energy could slow down, affecting industries that have already invested heavily in green technologies. Climate change-related disasters are increasing in frequency and severity, causing billions of dollars in economic damage. A lack of commitment to climate action under Trump could exacerbate these problems, leading to increased costs for disaster recovery and insurance industries, ultimately burdening the global economy. The dollar's role in the global economy. The US dollar's strength and stability are crucial to the global financial system. If Trump's policies lead to economic instability, a weakening of the dollar could occur. Countries holding large amounts of US debt, such as China and Japan, might begin to diversify away from the dollar, reducing demand for US treasuries and increasing borrowing costs. This scenario could trigger a domino effect, causing financial crises in emerging markets that depend on the dollar for trade and debt servicing. Conclusion. While Donald Trump's policies have been credited with boosting economic growth during his first term through tax cuts and deregulation, they also introduced significant risks that could have long-term consequences. A second Trump presidency or continued political influence could escalate trade conflicts, undermine financial stability, increase national debt, strain international alliances, and hinder global efforts to address climate change.